Hello and welcome to Finance Conversation. This is the 20th episode of the Merging Life and Money Show, and I am super excited to be here. If you are new here today, I am your host, Marie-Jo César. I come to you live every Thursday at 5 p.m. Pacific Standard Time to share valuable information about how to achieve financial wellness and to live your life with means and meaning. Today, we are going to talk about an important tool that you must have in your financial planning toolbox, and that is insurance. More precisely, term life insurance. I did mention in my show, I think number 7, that I would come back and talk some more about insurance. And this time, to help me with this important topic, I have with me Eric Dudley, an independent financial advisor who is a life insurance expert and a former educator, passionate about teaching people on financial matters. Welcome, Eric, to the Merging Life and Money Show. And welcome, listeners. Thanks for joining in today. So grab a pen and a notebook, as you might want to take some notes to discuss further with family members, friends, colleagues, because it is about sharing values that could benefit others. So if you have any comments or questions, make sure to put them in the chat. And if you are watching the replay, make sure to type #replay in the chat and leave me some comments and questions. Life insurance, the topic of the day, is a broad subject which is very often misunderstood. As a result, today, Eric and I will focus on term life insurance, as I mentioned earlier, and talk about 3 main points. And I'm just going to state them, and we're going to get into the conversation. What is term life insurance? Who is best served by term life insurance? And the details to look for in your term life insurance policy. So, Eric, my understanding is that insurance is protection, and buying insurance is important as it ensures that one is financially secure to face any type of problem in life, which means that one must have different type of insurance, right? So tell me, what is term life insurance and what does it cover?
Well, thanks for having me here today, MJ. I'm really excited about covering this topic because term life insurance is something that a lot of people are confused about, and I definitely don't want people to be confused about it. Insurance in general is used in all sorts of ways, as you know, for auto insurance, just in case people have auto accidents. If you have fire insurance, just in case you have a fire. But term life insurance is something that you take out in case you need to replace your income because a person who is earning income has passed away and they still have obligations. They still have bills to pay. They still have children to raise, and they definitely don't want to leave their family stranded. So term life insurance is about replacing income.
Okay. Thanks for the clarification. So, is there a specific time in one's life that they ought to acquire term life insurance?
Well, it could be at any time that they need to replace income. That's the key. So if they were totally financially stable and had financial independence, meaning that they don't need to earn income at 25, they would probably not need term life insurance. However, most people aren't in that situation. So while they're in their earning years, while they're working jobs and having bills to pay, they should have some type of insurance. And term life insurance is the most affordable insurance, and it gives you the most coverage for the least amount of money. So what I always suggest is that you just look at and see how much you owe and how much you make, and you can judge how much life insurance you will be able to need and how long you'll need it for.
Mm-hmm. Okay. So it's very interesting that you should explain the importance of having life insurance. And as I always say, I was always told that my income was my greatest asset and I must insure it. And as you well said, we all need our car, so we make sure that we buy car insurance. We just in case the unexpected happens, right? We want to fix our houses if something unexpected were to happen, so we buy homeowners insurance. So I am the money-making machine in my house, right? And so I have to make sure that if something were to happen to me, those relying on my income would be protected, right? So what type of insurance policy would I need to cover my income? Is term the one? I mean, can you expand a little bit of life insurance as it relates to insure oneself?
Sure, yeah. I believe that term life insurance is a tool, just like other life and other types of life insurance are also tools. Most people who need term are middle class people. That of course makes up most people, and they're going to want to have the most coverage for the least amount of money, and that's what term is for. The insurance companies, of course, are betting on that they're going to be able to have you pay premiums for X amount of years, whether it's 10 years or 20 years, 25 years. There's even some term life insurance policies that go as long as 35 years. The insurance company is betting that they'll never have to pay the death benefit. Now, you may say, well, that sounds terrible, but just consider that in exchange for that, the insurance company is willing to let you have a lot more coverage, a lot bigger death benefit to cover your family more completely in exchange for that. Okay. And so if you were to take, for instance, a whole life policy at the age of 30, and if you wanted $1 million coverage, you might be paying hundreds of dollars a month for that type of coverage. Whereas if you take out $1 million term policy at the age of 30 for 35 years, you might pay $60 a month. Oh. So there's a big difference in the amount that you pay in exchange for having it only be a term that will last until, in this case, 65 years old, as opposed to having a whole life policy, which you may collect on, eventually. Of course, you won't collect on it; your loved ones will. But you will wind up paying a lot more for it.
Okay, good. So tell me, so you it's a term, right? So the policy would expire at some point in time, based on the the term for which you purchased it. So when the term ends, that's it. I mean, are there other options? Let's say I took it, I was 25 and for 30 years. So here I am, 55. And how can I maintain this policy if I wanted to?
Yeah, that's a great question. A lot of people want to know that answer because, of course, they are afraid that maybe I didn't get the term for long enough, right. And they still have insurance needs whenever the term ends. Most term policies have convertibility, which means you can convert your term into a whole life product at that time whenever the term ends. So it gives you some flexibility just in case you need some more years. Now, of course, the goal with term life insurance should be that by the time that you get to the end of the term, you are now financially independent or financially self-insured, which means that now you have enough money in savings, in investing, your 401k, your IRA, whatever it is, that you won't actually need to have the need for any life insurance. You will have the ability that if you were to pass away, your family will still have enough money to pay all the bills and be able to, settle your final expenses, and your family would still be secure. But if you're not at that point, there is convertibility to term policies.
Yeah. So I hear what you say. And also, in doing my research for the show today, I noticed that statistics are reflecting that despite the importance of this tool, only 54% of Americans have some type of insurance cover some type of life insurance cover. So in your opinion, why is the number of Americans with life insurance cover is so low?
Nobody likes to think about their own mortality. I mean, it's a bad subject. That's one that whenever I start talking about it, people start crossing the street. They don't like talking about that stuff. So unfortunately, people don't want to look that far down the road and look at the plain truth that everybody will pass away at some point. But it's a hard thing to deal with. But even worse than what your statistic, what you just said, was many people, even though they have insurance, they are underinsured majorly. They have not considered all of the things that they need to make sure are paid for just in case they pass away. So it's always good to have a professional sit down with you and actually check and make sure that you're covered for all sorts of possibilities.
Okay, so there could be a situation where you could be, as you say, over or underinsured. So being that you're living out your passion right now in educating people and teaching people about the necessary financial tool that they need in their toolkit to achieve financial freedom, how do you I won't say convince, but explain to people in masses, the importance of having a life insurance. I mean, particularly, you're working, you have family that rely on you, and, the inevitable could happen. We don't know when. So what are you using currently to do that, to persuade people that they must have it?
That's a good question. I would like to be able to explain things with math. Honestly, I love math. I'm an analytical person. I'd love to be able to show them on a spreadsheet, just say, well, you're going to have to pay for your mortgage. You're going to have to pay for these two kids' college funds. You're going to have to make sure that your wife has income for X number of years, making sure that she's okay too. You're going to have to pay for all sorts of final expense possibilities. And I'd like to be able to design the insurance policy according to math.
Okay.
It doesn't always work out that way. A lot of times people buy through emotion instead of through reason. And so you have to really think to yourself, what am I going to be able to tell them that's going to make an emotional impact to them so they understand this is really serious. And so what you wind up doing is telling stories that are real about people who seem like they were totally healthy and they wind up getting a bad diagnosis, are coming home from work one day and they get in a car accident, or just living their life to their best, and all of a sudden it's cut short. And unfortunately that's what insurance agents have to do, because that's what really strikes to the heart of people. Whenever it becomes real to them, then they're willing to look at the math and say, okay, well, that's how much I need now. Okay, I'm willing to look, because it's hit them emotionally in their heart, because they see, oh my gosh, this could happen.
Okay. So over to the second point that we wanted to touch on today. So who is best served by term life insurance?
Well, the best one is the people who have income and who are making income in order to make ends meet. So people who are starting to work, for instance, okay, and they've just gotten married, for instance, that would be another great one, because now they have somebody who's depending upon their income. They just had a child. Now they have two people that are possibly depending upon their income. They get another child, that's a third person. Now, you also are times whenever people just buy houses. Now they have a new expense, another bill that's going to be needed to be paid, whether you're there or not. It needs to be paid. And anytime that you have more expenses, perhaps maybe even you're taking care of your parents at this point, you need more income for them to make it. Again, this is all about income replacement. And so you just got to do the math and figure out how much you need.
Okay. I just want to mention that my experience when I first was confronted, and I'm using this term very, very carefully. I had just gotten married, as you said, and we were looking at getting life insurance, but for some reason, I was totally turned off because I really felt that the person who approached me about this purchasing this very important tool was so pushy that I wasn't even able to see how important that thing was, because I was totally turned off by the approach. And I almost felt that the person was desperate to sell me something that I could not understand. And I could tell you, talking to people now, which unfortunately that ship has sailed, right? They are now in their 50s and have all kind of chronic diseases. So they really felt the way that I felt when they were in their 20s and 30s, which was the ideal age or window to purchase this kind of insurance, right? So again, and it's important for me to ask those questions. So how do you think that we can, and I'm saying we as financial wellness people, strategists and consultants and advisors, how should we approach the subject?
Well, what I like to do is I like to introduce insurance as the foundation for the financial house. Okay, it has to be built on something. You don't want to build a structure on sand because the house is going to collapse. You want to build it on a rock. And so I consider that the insurance is the rock of the financial house. And the reason why is because you can start building your emergency fund, okay? And you can start paying off all your debt. And then you can start planning for your retirement. You can start planning for your kids' college funds. And then you can continue with all these goals and dreams that you might have. However, if you could be 10 years into it and feel like you're doing great, but if something happens, one of the income earners dies, all of your house is going to collapse upon itself. So I like to show a picture of a house and just say the foundation of that house is insurance. You start with insurance and you build from there. And if you can do that, then you can have a really solid foundation, a solid house that's going to survive even if disaster happens in your family.
Right. Okay. Good. Thank you for the answer. So another thing that we wanted to really touch on, which is very important when purchasing a life policy. So what details should term life policy holders look for in their policies? And I'm asking the question because toward the end of the show, we're going to show some comments there. And it is I guess it is in the details, because life insurance is not something that we are born with, that we understand. This is something that must be taught to us or explained to us. So what are the details that one buying term life insurance should be looking for in their policy?
Well, there's several. One of them we already talked about was the convertibility. And like I said, most term policies these days, they do have convertibility, but you do have to make sure of that. So obviously that needs to be something you ask the agent, is it convertible at the end of the term? Another one is what are riders? Riders are all sorts of things that you can add on to the policy. It does increase premiums, but there's some advantages to it. Like, for instance, you can get a child rider, which will give you really inexpensive child insurance, which can be converted later on for the child's sake without a medical exam. which is a big advantage because what if they had some type of diagnosis during that time? They would still be able to be insured, even if they had some type of pre-existing condition. So there's all sorts of riders that you can get. You can get what is called return of premium, which means that all of the premium you pay during the entire time that you have it will be paid back to you at the end of the term. It does cost some money, but if that's something that people are interested in, there's all sorts of riders out there. So definitely that's something, again, to talk to the insurance professional, find out what type of riders are available, and see which ones are best for you.
Good. Thanks. I want to take a look at a comment here. And what is your, what can you advise on that one?
Term insurance that hasn't paid me anything when I got cancer, but okay, so this is a long-term life insurance that hasn't paid me. Okay, so I'm not sure if that policy had living benefits. I didn't mention that in the riders, but that is a rider, and a lot of them are called accelerated benefits. Accelerated benefits means that you can take a certain portion of the death benefit and use it during your lifetime in certain situations, especially if you get some type of illness that could be terminal or critical illnesses, and you can use it for treatments or however you want. Actually, if it was a terminal diagnosis, you might want to go on a vacation or something like that, and just live your life as best you can for whatever time you have left. And so I'm not sure if in this case she had the living benefits included on that, but that is another rider that you have to make sure about.
Okay. So, Larissa, I hope that Eric was able to clarify somewhat the dilemma that you were faced with some years ago. So, Eric, very briefly, I know the time is running out. What are the basic differences between term insurance and whole life insurance?
Well, whole life will cover you again all the way until the day you die. And so the insurance company knows that whenever they sign you up for a whole life product, they're going to wind up paying the death benefit. So because of that, they put that amount of money into your premium, and you wind up paying a much higher premium. And so that's the way that they're able to make their end meet. And I have no problem with whole life products. It's just, I think it's a tool for something else. I think whole life products are not really for middle class people who need more coverage. I think it's really more of a retirement vehicle in a lot of ways, or a final expense vehicle for people who are just wanting to pay for their final expenses of being laid to rest and possibly late term medical bills that they have to pay. Okay.
Thanks. Before again, I have one more question. They seem to be popping as we move along. Mortgage protection. Could you expand on this? Because there's mortgage protection and there is mortgage protection. So can you give us some detail on that?
Sure. Yeah, mortgage protection insurance is an insurance that you get where you would actually talk about what type of mortgage you pay every month. So let's just say a person pays $2,000 a month for a mortgage. And if something happened to one of the income earners, the insurance would pay you $2,000 a month until the mortgage is paid off. So if there's 25 years left on the mortgage, you would get $2,000 a month until the mortgage is paid off. A lot of times companies don't offer mortgage protection insurance like that anymore. That's the old school. People who are selling mortgage protection insurance nowadays basically just sell term life policies. All they do is just say, well, you've got 25 years of mortgage left, so let's go ahead and just get you both term policies for the amount of the mortgage that there is, and you'll pay it for 25 years. And after 25 years, you won't have a mortgage anymore, and you can stop paying the term policy as well. So really, term is a lot of times substituted for mortgage protection insurance, but you can find some companies that still do it the old way.
Okay. Great, great. So thank you so much, Eric, for all that information. And I know it's a very, as I said, personally, I found it to be somewhat daunting, but I do know with experience that this is a tool that we must definitely have in our financial planning toolbox. Okay, so you explain a lot, and I think what we will try to do is put together maybe a cheat sheet of a sort that we could offer the audience later on after the show. Okay, so I'm going to wind down some and sum it up a little bit. So today we talk about what is term life insurance and who is best served by term life insurance and the details to look for in your term life insurance policy, such as riders being one of them. So I am going to leave you with this last note. In my experience with insurance, life insurance in particular, through my life journey, I found that many people have the wrong type or wrong amount of insurance and pay too much for inadequate coverage. Okay, so some people are far overinsured and some are totally underinsured. So I hope that today's show has helped you clarify the importance of having term life insurance in your financial planning. So again, thank you, Eric, for all that information. And as you know, I like to end the show with a quote. And today's quote is from graciousquote.com. And it reads, "Nothing is more important than your life and your ability to make a living. So it makes good sense to insure your greatest asset, you." Okay, so before I forget, Eric, can you tell the audience how to reach you if they wanted to talk to you about their insurance need?
Well, sure. Right down at the bottom of the screen here, dudleyfinancialgroup.com is my website. I have a appointment links to my calendar, and you can set up an appointment anytime, or you could just give me a call. My phone number is on that website also. So I look forward to hearing from anybody. Thanks.
Thank you again, Eric, for spending some time with us this afternoon or this evening for you, because you are, in fact, beaming from Florida, the sunny state, I believe, right? So again, thanks. For more information about how to achieve financial wellness from the inside out and live a purposeful life with the money you have, join me next week, Thursday at 5 p.m. Pacific Standard Time, 6 p.m. Mountain Standard Time, 8 p.m. Eastern Standard Time, 9 p.m. for my Bermuda peeps, and 10 a.m. Friday, Brisbane, Australia time. Thank you for being here today on the Merging Life and Money Show. I am your host, Marie-Jo César. I will be back again next week. Until then, continue merging life and money. Bye for now.